Hello viewers, welcome back to my channel. I am Neha Paryani, and in this session we are going to discuss about two more topics from the subject income tax. So in our previous videos we have discussed few topics relating to the subject. So if you want to watch them, you can get its link in the description box below, also at the end of this video. So keep watching. So today we are going to discuss about two concepts, that is the meaning of gross total income and the meaning of total income. So it is very important to understand these terms. So first we'll discuss what is meant by gross total income in income tax. Okay, so it says the aggregate income of all five heads before deductions. Okay, so it says that the aggregate income of all five heads of income, we can say. In the previous class itself, we discussed the five heads of income, right? So the total of all those five heads before deductions will be called as gross total income. So I'll explain it to you. So basically we know that there are five heads of income. So first head of income is our income from salary. Then our second head of income is income from house property. Correct. Then third head of income is income from business or profession. Our fourth head of income is income from capital gains. It could be long term or it could be short term capital gains. And our fifth head of income is income from other sources. So the income basically which do not come under any of the above four heads will come in income from other sources. In our previous class, we have discussed it in detail. Now assume that there is a person called Mr. A. So Mr. A is an individual and he is working in some company. So he will be receiving income from salary. He will be receiving salary. So we'll treat it as income from salary and assume for an year. So we'll take it on yearly basis. So income from salary of Mr. A per annum is suppose 4 lakh rupees. Okay, 4 lakh rupees. Then Mr. A also owns an house property which he has given on rental basis to somebody else, and Mr. A is receiving rent from it. Okay, assume he is receiving rupees 60,000 rent per annum. So these are just random rough figures, imaginary figures to make you understand the concept. Okay, then Mr. A do not own any business or profession, so he do not get any income from business or profession. So leave it. We'll treat it as nil here. Okay, then Mr. A suppose has sold his vehicle, his two-wheeler, which he has been using from last 5 years. So we'll treat it as long-term capital gain. Okay, and he received, assume rupees 40,000 from selling his vehicle. So he's been using it for last 5 years. He's receiving 40,000 rupees. So we'll treat it as income from capital gains and assume the income of Mr. A from other sources is somewhere around 5,000. Okay, so if we total this, the total of income of all the five heads, the total will be rupees 5 lakh 5,000 rupees, right? So this income, we call it as gross total income, or we can say it as GTI, gross total income. The aggregate income of all the five heads before deductions. Okay, so this amount is before deductions. I will tell you what is mean by deductions. Okay, so this income we call it as gross total income. Now coming back, so next term is our total income. So what does it says? The aggregate income of all five heads after deductions. So this word is important here. The aggregate income of all five heads after deductions is called as total income. So deductions under section 80C to 80U. Now I'll explain you what are mean by deductions. Okay. So our income tax department, our income tax act provides certain deductions for its taxpayers. So what is mean by deduction in simple term or in a general language? Deducting means what? We can say it as reducing, or we can call it as a subtracting, right? So in income tax also certain deductions are allowed for the taxpayers. So these deductions will help the taxpayer to reduce the burden of tax. Okay, to reduce the burden of tax. So government or the income tax department allows certain deductions. For example, if Mr. A is contributing some of his part of salary towards a provident fund, towards public provident fund. You know, public provident fund is kind of a savings for an individual, okay, which he can use whenever he wants. So if out of his 4 lakh income, suppose Mr. A is contributing rupees 30,000 per year for his provident fund, public provident fund. Okay, so that amount we will deduct. We will deduct from the gross total income of Mr. A. Okay, then also assume that the another example for deduction is Mr. A is also paying the premium for the life insurance which he has taken on him. So Mr. A has life insurance policy or any insurance policy and he is paying the premium for it. Assume that for an year, Mr. A is paying 20,000 rupees premium for the insurance. That amount is also deducted. Okay. So along with this, there are also many different deductions which are provided by the Income Tax Act. So on these deductions, any tax will not be charged. Okay. And these deduction will reduce the tax burden of an individual. Okay. So after deductions, after deduction, whatever the amount, whatever the income we get, that we call it as total income. So it means out of 5,05,000, if we deduct this 50,000, so it will be 4 lakh and 55,000 rupees is the total income of Mr. A. So income from 5 hits after deductions is called as the total income. Okay. Now this amount is also called as taxable income. Total income is also called as taxable income of an individual. And as per our income tax rules, if the taxable income of an individual for an year is if it is more than 5 lakh rupees, okay, if it is more than 5 lakh rupees, then some tax has to be paid by the individual. Okay, but here the total income or the taxable income of Mr. A is less than 5 lakh rupees per annum. It is 4,55,000 after deductions. So Mr. A do not have to pay any tax to the government. Okay, so the tax limit in India is 5 lakh rupees per annum. If the income of an individual after deductions, if it is beyond 5 lakh or if it is more than 5 lakh rupees, then the person will be eligible or the person is liable to pay the taxes as per the slab rates. Okay, the slab rates will be different for every year, right? So as per the slab rates, certain percentage of tax has to be paid on the income which is above 5 lakhs. Suppose the income of Mr. A after deductions was 6,55,000. It's not 4,55,000. Assume it was 6,55,000. So in this case, the income is more than 5 lakh, right? So Mr. A is liable to pay tax, so as to pay 10% tax. As per the current slab rates, Mr. A has to pay 10% of the tax on which amount? So on the amount which is more than 5 lakh, means out of 6,55,000, remove 5 lakh rupees or deduct 5 lakh rupees which are exempt. So on remaining 1,55,000 rupees, Mr. A has to pay 10% of income tax to the income tax department. So which is nothing but of 15,500 rupees. Clear? So this is how the income is calculated. So total income is gross total income means the income of all the 5 heads. The aggregate of all the 5 heads income is gross total income. Out of gross total income, if we remove deductions also, then the income that we get is total income, or we can also call it as taxable income. And if the taxable income is more than 5 lakh rupees per annum, the person is eligible to pay the tax. So on which amount he has to pay the tax? The amount which is exceeding 5 lakh rupees, the difference amount. Okay. So here in this case, on 1,55,000 rupees, Mr. A has to pay 10% tax as per the current slab rates, which is nothing but 15,500 rupees will be the tax of Mr. A. Okay, so that's all for today. In our upcoming sessions, we'll be discussing further more topics. In our next session, we'll be discussing about the residential status of a person. Okay, so I hope to see you all in my next videos. If you like this video, please hit the like button. Also share the video with your friends. So you can ask me any doubts in the comment sections below. I hope to see you all in my next one. Till that, happy learning.